Hello there, I'm Glenn Downing, Certified Financial Planner at Cameron Downing, a registered investment advisory firm in Miami, Florida. This is the second question and answer video I'm doing today. The other two are about financial planning and investment planning. So let's get started with the first question. What kinds of insurance do you offer? Well, Jonathan Cameron, my business partner, and I are licensed in Florida to broker life insurance, disability income insurance, and long-term care insurance. In our regulatory world, this is an outside business activity, meaning our insurance sales are apart from the registered investment advisory firm. In obtaining insurance coverage for our clients, we shop the market for the most suitable product at the best price. Question, can I get auto insurance or homeowners through you? The answer is no, you can't. That requires another license, which we do not hold. And property insurance is a complex and huge discipline of its own. Now, as part of a complete financial planning engagement, we will evaluate our clients' risk exposure in these areas and recommend coverage changes as appropriate. And we're glad to refer you to insurance agents who specialize in these areas. By the way, we neither pay nor accept referral fees from other professionals, nor do we accept any liability for their actions. Next question, what role does life insurance play in a financial plan? Well, a big part, a crucial part. A life insurance death benefit can complete the overall plan in the event of an untimely death. Fundamentally, you buy life insurance because somebody else is depending upon you for a living. Now, in the case of your children, does your responsibility to them end because you've died? And I would say to you, no. Once you've brought children into this world, it's your responsibility to continue to care for them. So what do? You buy life insurance. Question, tell me about life insurance for tax-free income. Well, this can be a good option. The strategy is to purchase a cash value policy in a way that maximizes the cash paid in relative to the policy death benefit. In other words, you want to keep the death benefit low and the cash value high. With compound earnings over time, you may be able to generate a substantial tax-free income in later years. If a life policy does not become a modified endowment contract, monies distributed from the policy are tax-free to the policy owner. Lots of ins and outs to this. New question. Can I get long-term care benefits in a life policy? Yes, maybe. Some policies offer full long-term care riders. In fact, it's rarely in a client's best interest to switch life policies because, of course, they're going to get more expensive as you get older. But this is one case where it may make good sense to move your money from an old policy into a new one that does have long-term care benefits. Question, are my assets protected in a life or annuity contract? Am I sued? And maybe, actually probably, there's a significant degree of asset protection in Florida for funds in life and annuity policies. Florida courts have long held that such assets are judgment-proof, meaning that should you lose a civil suit, these funds are not available for attachment by the plaintiff. Lots of considerations here, including how long you've been accumulating money in these policies. If this is your circumstance, you should consult with an attorney to be sure. Now, who can get life insurance? Well, you got a heartbeat and a checkbook, you can probably get it. You may not like the price, but that's another matter. Insurance is a business like any other. In this case, though, the consumer has to medically qualify to purchase the product. If you just had a cancer diagnosis last week, you're not going to get life insurance. Unfortunately, most people think about purchasing it when? Well, when they've got a health scare. and by then it's probably too late. Insurance companies call this adverse selection, and therefore they medically underwrite each life policy. If not for underwriting, no one would ever buy life insurance until, you got really sick. All right, next question. I live outside the U.S. but travel to Miami frequently on business. Can I buy a life policy from you? Well, perhaps, possibly. You'd need to have a U.S. taxpayer ID. Demonstrate U.S. ties, such as a residence or business interest here, and premiums must be paid in U.S. dollars. The application and medical exam must also be done here in the States. Another question, what does medical underwriting involve? Well, an examiner will come to your home or place of business and complete a medical questionnaire with you and do a brief physical. The examiner will draw blood, you'll pee into a cup, maybe the insurance company will require an EKG. All this can be done by that examiner. The company will most likely also order medical records from your physician. Question, should I purchase disability insurance? Let's think about it. The purpose of DI, as we call it, is to ensure your future stream of income. It is most often purchased by professional people who have invested substantial time and money into their professional educations. Typically, you can insure from 50 to perhaps 60% of your gross income. The benefits received on an individual policy are tax-free if they have not been deducted somewhere else as a business expense. Lots of moving parts to a DI policy, from policy definitions to benefits and pricing. But the short answer, yes, we always recommend disability insurance, unless the client has substantial assets. Question, is that expensive? Well, many factors that go into the pricing of a DI policy. These include your age, of course, the amount of income to be insured, the elimination period, which is sort of an initial deductible during which no benefits are paid. There's also the benefit period. It can be for a period of years or maybe to age 65. And the inflation adjustment, if any. Expect to pay between 3 to 5% of your insured income. The best place to get it is as a work benefit. But if you do go out on claim, that benefit will be at least partially taxable. So question, how do I sign up for disability insurance? Well, an application, of course, but in this case, there's not only medical, but financial underwriting as well. The medical underwriting can actually be more stringent than underwriting for a life policy, because what may not kill you may lay you up in bed, causing a claim. For the financial underwriting, you have to submit tax returns to demonstrate the income that you want to insure. And then, new one, do I really need long-term care insurance? I'll say this, you at least need to think long and hard about it. Long-term care insurance is designed to pay for the care you need for a long-lasting debilitating illness, such as an Alzheimer's. The point is to preserve the retirement nest egg for the surviving spouse. 10 out of 10 clients will tell us that outliving their money is their primary retirement concern. What happens if one spouse becomes ill? Probably like most people, you will put yourself as the survivor at risk. So question then, what happens if I never use the long-term care policy? Well, what happens if you go 6 months without crashing your car? Do you say, damn it, I just wasted all that money? No, of course not. You thank God that nothing bad happened and you paid for insurance coverage. And that's the end of it. Still, a commonly cited statistic is that by age 75, 75% of us will need some type of long-term care. Question, my spouse is just now showing signs of early Alzheimer's. Can I still buy long-term care? And the answer is probably not. There's medical underwriting involved, and part of that underwriting will be cognitive tests. For example, you may be asked to come up with a list of 10 items, random items. A little later, the examiner may ask you to recall those 10 items or use some of them in a sentence. In ways like this, cognitive impairment is discerned. What else? It's a catch-all question. Honestly, I think I've hit the high points. Insurance policies are complex financial instruments. They are contracts. They perform exactly as the contract specified. So it's very important that the consumer knows what he or she is purchasing. But again, insurance completes the plan. Typically, as your assets increase over the years and your parental responsibilities decrease, the need for life insurance also decreases. If you're all set for retirement, then maybe you can sell or cash in your old policies. I've done a video on those options, by the way, so have a look at that one too. Also, when you stop working, there's no income stream to insure, so your disability policy can go. But it is in the later years that you need the long-term care policy the most. So look at some options. When you're in your early 50s, that's when the premiums are still relatively affordable. Well, thanks for watching. Look for the other Q&A videos that I mentioned earlier on investment planning and then on financial planning. Got any questions for me? Email me, info@cameron-downing.com. Once again, this has been Glenn Downing, Certified Financial Planner Professional at Cameron Downing. Feel free to look us up on LinkedIn, follow me there, and we can connect. Thank you.